Why U.S. housing hit 55 trillion and what it means for Massachusetts. The total value of the U.S. housing market just crossed $55 trillion. That's more than double what it was in 2006. This data comes from a new 20-year retrospective released by Zillow, which launched back in February of 2006, right before the last housing bubble peaked. So the big question is, if housing is technically more affordable than it was during the bubble, why does it feel harder than ever to buy a home today? Let's break it down. Back in 2006, the total value of U.S. housing was about $26 trillion. Fast forward to today, and that number has grown to $55 trillion. That's nearly $30 trillion in new housing wealth, mostly through home appreciation and equity growth. For existing homeowners, that's been a massive wealth builder. But for new buyers, it's created a much higher barrier to entry. One of the most misunderstood parts of today's market is affordability. During the peak of the housing bubble in 2006, a typical mortgage payment consumed about 34% of the household income. Today, that number is 32%. So technically, affordability is slightly better than it was during the bubble. But that comparison hides an important detail. Just before the pandemic, in early 2020, the typical household spent only 23% of income on a mortgage, and a household income of roughly $52,000 was enough to buy a typical home. Today, that required income has jumped to about $93,000. That's the real shock. Housing didn't just get more expensive, the income requirement moved up much faster than wages. So what caused this? Zillow points to one main issue: supply. After the 2008 financial crisis, home construction collapsed. And even though demand recovered, building never fully caught up. As a result, the U.S. is currently short about 4.7 million homes. That shortage affects everything: prices, competition, and how long it takes buyers to enter the market. Now let's bring this home to Massachusetts. In markets like Boston, Cambridge, and much of greater Boston area, supply constraints are even more severe. We have limited land, strict zoning, high construction costs, and strong, consistent demand driven by education, healthcare, and tech. That combination keeps prices elevated when national markets cool. Like 2006, though, today's market is not driven by speculation. Back then, cities like Phoenix, Miami, and Tampa saw prices growth over 25% per year, fueled by loose lending and risky loan products. During the pandemic, Austin briefly topped that with over 40% growth in 1 year. But today, that kind of frenzy is gone. Nationally, home values were almost flat in 2025, growing by just 0.2%. Zillow says this is actually the healthiest market environment we've seen in some time. The hottest market right now is Hartford, Connecticut, with about 5% annual growth, not 30 or 40. Slow growth is boring, but boring is stable. In Massachusetts, we're seeing something familiar. Prices haven't collapsed, but they've stopped accelerating. Buyers have more time to think. Sellers are pricing more realistically. And competition is still there, just not the chaos we saw in 2021-2022. Mortgage payments are also about 8% lower than a year ago, which has given buyers some serious breathing room. Looking ahead, Zillow projects that by the end of 2026, 20 major U.S. markets could once again become affordable for median-income households. That won't fix the housing shortage overnight, but it's a meaningful step in the right direction. So here's the big takeaway. The U.S. market didn't break overnight, and it won't be fixed overnight either. But today's challenges are driven by long-term supply issues. For homeowners, housing has been the largest source of wealth creation in modern history. For buyers, the path is still difficult, especially here in Massachusetts, but the market is slowly moving towards balance. If you want clear, data-driven updates on housing, Massachusetts real estate market, make sure to subscribe. And if you're buying, selling, or waiting on the sideline, drop a comment and let me know where you stand. Thank you for watching, and don't forget to subscribe.